Everyone checking in on the MJ names. Always tough to do the Monday videos because over the weekend I have the time and luxury to do 30 tickers, and now I got to narrow it down to a lot less than that. But we're going to look at the big five, the tier 2, 3, VFF, TGOD, PYX, and CXXI, IPR, CURA, C-Webb, and MedMen. So today we had some nice bounce follow through, the gap down for buying on Friday, getting that follow through. And the S&P 500, huge, going 1.5% today. Very bullish market environment. It was what looked like program buying to me on the S&P 500. I'll point that out as to what I mean in the SPY video later tonight. And this definitely favors the daily and weekly time frame for the overall S&P 500. So looking at CGC, we have a new daily higher low established, and that's now 43.71, so a clear higher low. And we can draw trend lines. I don't usually draw trend lines. The price action is clear enough for me visually, but for some newer traders, the trend lines often give more clarity. So we'll draw these trend lines. That's how I would draw it. And we can see that there is a flex point coming and there's a break imminent. So we bounced off the support line 3 times, making it a valid trend line. No closes below this uptrend line. Resistance, rejecting the price. No closes above the downtrend line. So I choose where I put those lines by where the candlesticks are closing. And we can see that we could still see some follow through for the bulls and reject perhaps in the mid to upper $47 range, pull back and tighten up. Don't necessarily have to break this pattern this week. If we do not break out of this pattern this week, it's going to break early next week, pretty much a guarantee. Look at the volume. Volume is pretty consistent over the last few weeks. When we see a clear break from this pattern, there will be a volume spike associated with it that will be very clearly visible. Let's say the 20-day average volume is 7.5 million right now on CGC, and I would expect to see volume in line with a 12 to 15 to 20 million share traded day when this break clearly occurs. So that's the kind of signal where we say, is this break happening? Is this for real? And the volume is our proven indicator that tells us whether the break is for real or not. So keep an eye on that volume. Hourly high or low on CGC, established at 45.51 today, and then it broke by a penny, but that's a double bottom. So if we look at that on the 15-minute time frame, high, low, lower, high, double bottom, bull break at the end of the day, and some pretty significant buying action into the end of the day with a recovery back to the highs. So that gives us a strong close on the daily time frame up near the high of the day, and the bulls are going to try and see follow through and make their way up towards this resistance level, which is the lower high pattern over the past couple weeks. This is a very important pattern to be watching for the sector as a whole. Even if you're in Blue Sky Bull VFF, who has been very strong, you want to be aware of what's going on with CGC and the major names. Cron had a downgrade today, and that definitely took all momentum away from the bounce opportunity. Support right now is 2067, and if we lose 2067 support, we're losing the daily uptrend for the first time in a long time on Cron. We've had this daily uptrend ever since this blue sky run from $10 essentially. So we never lost the higher low pattern, and now that's in jeopardy. And we technically lost it today by 10 cents. Didn't get a whole lot of bearish follow through, but that's a little bit of a short-term red flag here where we have the high, low, we got the bull break, couldn't get the all-time high, and now we're consolidating. The most important weekly support is 1950, and we're still about 5% plus above that level, about 7%. So we do still have a couple support levels to be watching, but that downgrade was at a bad time for the bulls to try and defend the daily support level. I am keeping an eye out for hourly oversold conditions because if we do drop down towards the $20 psychological level, both the hourly and the 4-hour RSIs will be getting towards oversold. So that's worth keeping an eye out for. But momentum shifting a little bit, and we had the crazy hype run in Cron for a long time, and now that crazy hype run is shifting over to VFF. So the question is, how much money is going to leave Cron to look for momentum and hype in other individual names? And right now, it's very clear that the bulls are struggling a bit. So short-term support will be 2057, 20 psychological, and then 1950 to try and maintain the weekly uptrend. Break of 1950 is a significant shift in momentum that tells us weekly consolidation is coming. ACB, nice follow through for the bulls today. We had some news this morning that had a strong start and still anticipating that we're going to be unlikely to break 842 on a straight shot. I would anticipate that we're going to need to consolidate before that resistance level is tested, as it's still over 5% from where we currently stand with the close today. If we were to see this level break, we would need to see increasing bull volume, likely more than 31 million shares traded. So again, volume tells us likely scenarios, or it helps guide us. Can the bulls just break straight to a higher high? Yes, but they cannot do it without significant volume. So we're going to be watching the hourly uptrend here as well. Hourly support at the end of the day, 788 was established. So 788 needs to hold. If we lose 788 tomorrow morning, we're going to be looking at the potential of a daily lower high being set and then tightening daily range in a mini equilibrium after the wide range from the profit taking at the end of last week. APHA also strong close at the high. Again, look at the volume as a clue. So if we see declining bull volume on a bounce attempt, we can absolutely anticipate that a daily lower high is going to form, most likely, compared to 1068. If we are seeing increasing bull volume heading up towards this level, the odds that we could see a break of it would be higher, but that's not the case. It's very low bull volume. So that 1068 resistance level is going to be key. And once we lose the hourly uptrend, that's the indication that our daily lower high has been established. Hourly higher low in the afternoon, 962 is the most important level. So 962 key support, and resistance is going to be up at 979 and 10 psychological. So for the four names that we just looked at, the hourly support level is going to be key. If we lose the hourly support level, that's the first indication that the 2-day bounce is coming to an end in terms of momentum, and we'll then have to consolidate and try and hold that daily low from Friday to see any kind of follow through on the bounce. So to change this trend on APHA, it would be a lower high, and we'd have to hold the low of 915 with a higher low and then change that trend. So that's the scenario for best case scenario for the bulls for this week. But we're still underway with this bounce, and the strong close in a few of these names means that we could potentially see some follow through, especially if the S&P 500 continues to see follow through. TLRY, double top up at 70 psychological resistance. So we did establish a new support level with the low of today, and the hourly 67.57 found a support level. But clearly, if we don't break $70, the bulls aren't going anywhere. So that's the most important resistance level first thing. If the bulls are able to pick out, or I should say if they're able to break that resistance, I'm going to be looking at 72.95 and then looking all the way up at 76.39 after that. So a nice recovery for the bulls. The most important support level is now going to be 67.57, and the daily time frame, we know a daily lower high is going to form on this bounce attempt because anything under 78.68 is a lower high, and that's still over 10% away. So again, a loss of the hourly uptrend is the first indication that we are setting the daily lower high. And this was an instance where we did take out an hourly support level first thing after the open, but the bulls did recover a little bit. So that tells me it's a little bit choppy. And again, when I say those, the general statements, lose the hourly uptrend, the daily lower high has been set. That is the most common scenario. There are definitely instances where we lose support and then the bulls are able to recover. But again, we're going with majority of the time what happens in this scenario. And in most instances, the loss of the hourly uptrend signals the daily lower high has been set. So if we reject from $70 tomorrow morning, that's going to be a clear bear level where bears will enter and put their stop above $70, and bulls are not going to be buying if they can't break $70. That being said, if we do break $70, there could be a nice quick couple move percent to the upside while we look at a lack of resistance immediately after $70. So I still don't like TLRY overall just because it's so much weaker on the daily and weekly time frame compared to a lot of these names. I personally would rather be playing the names and buying the dips of the names that are in daily uptrends as opposed to the names that are falling apart on their setups. But that's just me. Bears are waiting on Canadian MJ sector for daily lower highs to be set. The question is going to be, are they going to be able to get any follow through once they enter those positions? OGI, nice follow through as well. Again, if we can't break 950, we're going to be looking for a tightening range to form. So 950 is the must break resistance. And just looking at it on the 4-hour time frame for a little bit different view, you can see a 4-hour equilibrium here is shaping up. And if we lose the pattern of every candlestick a higher low on the 4-hour, that's going to indicate our lower high has been set, and we'll then have to pull back and look for a 4-hour higher low compared to 812. So overall, it's nice bounce follow through, but we could be getting a setup where we stay in this tightening range at least into the end of the week. And again, I do like that 4-hour time frame for clarity on OGI. Daily higher low was established on Friday, so anything above 812 will keep the higher low pattern intact on the daily time frame. It's just going to be about the tightening pattern. And again, declining volume. If we were to see this kind of candlestick and a close up at the high of the day and increasing bull volume, we could absolutely just look for continuation straight to a new all-time high, but that's not what we got today. TRST, this is still looking all right for me on the weekly. I'm still liking that weekly higher low. And the point is that we broke support on the daily time frame and instantly saw significant bounce. So here's that key support of 1142. We broke it. The bulls bought that dip, and now we're looking at anything under 1261 as a lower high. If we can't break 1261, what I am going to be looking for a potential entry here, and again, look at the volume. Not many individual Canadian MJ names are going to see volume on par with what we saw on Friday, but the most clear scenario would be a bounce, a rejection from 1261, unable to break the lower highs, and then a higher low compared to 1047. And if you are not in a position at this point, rather than enter right now, knowing that we're extended after a 2-day bounce and knowing that resistance is approaching, it's much better risk to reward to enter on that consolidation looking for the higher low, because your stop level is going to be 1047. You're much closer to the key support level, and then the bulls are going to attempt to change that daily trend and see weekly continuation. So keep an eye on TRST, because there are no red flags at this point, and the bears haven't been able to put together any momentum. We've had some solid pullback days, absolutely, but it's just one-day events so far at this point. So TRST does still have my attention for the bulls, and we're going to be watching, can they change that daily trend? HEXO, another name that stands out. Look at the volume. So that follow-through is there. Hexo has earnings this week, and off the top of my head, I forget specifically which day it is, but I'm not trading Hexo, so that's up to you to determine if you're trading Hexo. CVSI also has earnings this week, as does IIPR. So Hexo is doing the same thing that TRST is doing in terms of trying to find a weekly higher low and trying to change the daily trend back in favor of the bulls. Anything under 758 is just a lower high on the daily, so it's that same kind of move where we need the higher low and then continuation, although the odds that we can break 758 are higher on Hexo due to the volume. So we need about 17, so that's 2.5% to get the break of the daily lower highs. For TRST, we're going to need about 8%. So a significant difference in proximity to resistance, which tells us Hexo is more likely to break its daily lower highs on this attempt than TRST is. They're both fairly similar setups, and they're both worth watching for the multiple weeks of consolidation that have taken place with no red flags on that consolidation, and a solid 2-day bull move Friday and today to try and shift that momentum back to the bulls and establish those weekly higher lows. VFF, all bulls, beautiful continuation to blue sky breakout, big volume today, and the big volume, in my opinion, is due to the US ticker getting back in action, unhalted at noon, and all-time highs continued. There were some nice trades in there. I did trade VFF after the initial profit taking once the new ticker opened up, or I should say once the old ticker opened up again, and bought that dip and sold the new high of the day, just a quick flip. But the bulls are in complete control at this point, and on the hourly time frame, we are extremely extended. We know we can stay extended in blue sky breakout. We just have to be aware that at some point in the near future, we will very likely pull back a solid 10%. So on the hourly, the support is 1588. Anything above 1588 keeps the hourly uptrend intact. When we lose the hourly uptrend, we'll look for healthy daily consolidation. And the daily chart has been a very clear uptrend the entirety of the last 2.5 months. So still all bulls, but again, when you look at a weekly chart like this, you know the risk to reward of any bullish entries at these levels is not good in terms of establishing positions. You can absolutely short-term trade, day trade up at these levels. If you have a cost basis much lower, you're obviously very comfortable, but entering at these levels is very bad risk to reward. TGOD on the daily, getting some follow through as well. Again, declining volume, so that stands out. It's all about 462. If we cannot break 462 in the coming days, we're going to look for the tightening range scenario. So the hourly higher low to maintain to keep the bulls strong, I'm looking at 435 and 434. When there's two levels right next to each other, I will always defer to the lower one. So 434 is the key support that the bulls must maintain. And if we lose that 434 support, then the odds of a daily tightening equilibrium will be more likely than not. And again, just looking at it on the 4-hour time frame, it certainly looks very similar I believe OGI was the name. And it is OGI. You can see 4-hour chart, and TGOD 4-hour chart. Very similar. It's just a question of whether we're going to set this 4-hour lower high tomorrow and then pull back for a higher low and give us that clear equilibrium or not. And I think the more likely scenario is that we do see that play out for both those names. PYX, solid bull day today after very healthy weekly consolidation. That's a weekly bull flag with a lack of resistance after it breaks, if it breaks. The daily trend shifting, very clear volume spike, highest volume in 2 weeks, breaking the resistance levels from the last 4 days of trading. We're now looking up at 27.49 and 27.83 as the only two real resistances before we're looking right back at the top of 29.12. Has the hourly chart consolidated? We're a little bit extended. 12, or make that 26.23 is the most important short-term support level to keep full control. And you can watch the 15-minute little uptrend here on PYX. But definitely worth watching, because even if we don't break 29.12, it's one of those scenarios where the bounce is so significant, we will look for a higher low and then another attempt at that resistance. And because this weekly time frame is looking so favorable, we could absolutely see another leg up, and it is worth watching out for. N. So N is still a potential daily bear flag at this point. Not much follow through on the bounce attempt, and the 4-hour time frame has a bit more clarity, where we have our low of the dump, high of the bounce, higher low, and now we're looking for a lower high compared to 84 cents. Look how similar this looks. And it was actually the daily time frame where it looked so similar. But the daily chart, we had the high and the low on the same day, just like the high and the low here. We consolidated 2 days. We traded sideways. We tried to break resistance and couldn't. Here's a consolidation for 2 days. No real sideways trading, but trying to break resistance now. This is just a mini version of the same exact pattern that we just saw. So it's all going to come down to, can the bulls break 84 cents or not? If we can't break 84, the bulls aren't going anywhere, and we're going to look to pull back and have to form a higher low compared to 68. If we do break 84, next level is 88 for a little gap to fill, and that will shift the momentum a bit, keeping in mind that the daily and weekly trends are not going to change in favor of the bulls anytime soon. So a tight 4-hour pattern to be watching as well. And so far, out of all the names that we've gone through, there's a good amount of clarity on 4-hour timeframes for a lot of these setups. CXXI is giving us a red flag. It gave us the red flag. I got to go back and watch the video from the weekend, because I believe I pointed out that it was a red flag that we dipped and didn't close above the open. Almost every MJ name that you're going to look at on Friday closed above where we opened, and CXXI was not the case, and we have some decent bear volume the last 4 days specifically, and we got zero follow-through today. And again, out of everybody that we looked at, this is the weakest bounce follow-through that we saw. It's a lower high and a lower low compared to Friday. So support is 146 and 140, and we are clearly pulling back on the weekly time frame now in an attempt to form a weekly higher low. So RSI on the hourly time frame getting down towards oversold. If we were to pull back another day tomorrow and drop down towards 140 and below, then we're going to be looking for an oversold bounce to begin to take shape. 4-hour RSI, not quite oversold just yet. But again, some initial red flags. If we were truly very strong here, we wouldn't have pulled back enough to break 160. We would have formed a higher low and seen continuation, just like OGI on the daily time frame. Pulled back, didn't get back, the entirety of the bull move. We saw a clear consolidation giving back some of the upside, but did not give back nearly as much as CXXI has now given back at this point. From 206, we've given back over 25% in the last 4 days. So when we do bounce, we'll look for a change in the hourly trend to signal the momentum shifting. Anything under 170 is just an hourly lower high at this point. IIPR, beautiful follow through on the bounce, the oversold bounce. I exited IIPR today. I think I said in the video over the weekend that my target was 74. If I didn't say it on the video, I said it to a member. So I exited half of my position in the morning, and I exited the second half of my position right at the end of the day because the target was hit, and there's not a lot of liquidity in the early trading on IIPR. And just this morning, I was moving around an order that you wouldn't think would have as much of an impact as it did because it wasn't a huge order, but I was moving around 1,000 share position, and it was drastically affecting the bid and the ask instantly. The bots were reacting to my orders. I would place a sell order on the ask, and as soon as I pressed that enter button, there was very low volume in the morning. Someone would sell into the bid, a bot would sell into the bid, and the bid and the ask would instantly drop. And that happened twice as I was just experimenting and playing around with how much effect does this really have. And again, it was instantaneous on when I hit enter to enter that sell on the ask. The bot would sell into the bid and drop the price down. So point being, I want to avoid that tomorrow. If I'm going to be looking to take profit before earnings, which is Wednesday morning, I know there's only one more day of trading before then. My target has been hit. So I'm going to sell into the end of the day liquidity rather than try and sell tomorrow morning when it takes a while. It takes 20, 30 minutes to establish some liquidity in IIPR. So that's a bit of a disadvantage compared to some of the very liquid, bigger names that we do play. But it's a nice bounce at this point, and we are getting exactly the setup we're looking for in terms of an equilibrium. This was my conservative target. We could definitely see the bulls make their way to 76, 78, and continue to tighten this range. We've got a low down here. I'm calling this 64 a low, high of 81.60, higher low of 66.55, and we're going to be looking for a lower high in the upper $70 range to see this daily time frame continue to tighten, likely into next week. CURA, this is a weak bounce attempt. So you can see what I'm doing going through all these names. I am comparing and I'm watching correlations. How is one name compared to the rest? So in the video over the weekend, I could say CXXI stands out as weak because I saw everybody else close higher than we opened, and it's notable and it stands out that we did not do that for CXXI. So when I've gone through all these other names and looked at how much bounce follow through we got today, and I come to CURA and I look at this bounce follow through from today's action in addition to the big upper wick from Friday, that's a bear flag, and that's an extremely weak bounce at this point. So out of every name that we just looked at, aside from CXXI, this is probably the top 3 weakest bounce as well. So the support that we're looking at is down at 846 and 817. Lose the hourly uptrend, and the odds of the daily bear flag are going to increase significantly. Resistance is $8.89 and $9, and the bulls have a lot of work to do to try and negate the possibility of the likely bear flag scenario that's currently forming right now. C-Webb on the daily chart, this is a nice pattern as well because we formed the higher low compared to 1751, and it's nice and clear. So this is what I was talking about, where you got the strong bull move, and rather than buy into the bull move with resistance looming and knowing that we're unlikely to break the daily lower high pattern, you wait and make an entry on the consolidation, looking for the higher low and playing off of 1751 support. So I pointed the same thing out. I forget on which ticker just now, whether it was TRST or OGI. Don't recall exactly, but the point remains the same. Let's just say TRST. Odds that we're going to break 1261 are unlikely. So rather than try and buy into this bullish momentum heading straight into resistance, it would be better risk to reward, in my opinion, to wait for some consolidation to form the higher low and make a play based off of the 1047 support. So that's what we have with C-Webb. The higher low is established. We held support by 44 cents. And now the bulls showed up in a big way with big bull volume. Resistance is $19.54 and $20. If we break $20, we change the daily trend back to the bulls, and our weekly higher low is very clearly established at that point if the bulls can pull that off. And you can see we're pretty much just consolidating sideways for the last month and waiting for this daily chart to work itself out. And it's worth watching for, because if we can't break $20 in the next 2 days, then this is another pattern that's going to continue tightening up into next week and give us a nice tight range for a clear break. But after the amount of volume today and the pretty strong close, I would definitely want to see the potential that the bulls are able to just break $20 on their first attempt and not need that further tightening daily consolidation. And last, we'll wrap it up with MedMen, another big red flag on the bounce attempt. Big upper wick on Friday was a red flag, same with CURA, and we're seeing the follow through of the red flags. Close at the low of the day. 355 is the only nearby support, then 346 and the all-time low 311. We continue to set hourly lower highs. 387 was resistance, couldn't break the high of yesterday, 382, and we saw profit taking as a result of that. So MedMen still giving us red flags, still hasn't recovered from its earnings reaction, and is still in control of the bears. So we got a good mix of clear bear names, clear bull names, some nice tightening patterns like CGC, which is the big daddy of those tightening patterns, and some decent setups to be looking for higher lows on OGI or TRST or some of these lead bulls that we're watching. And VFF, if you are a day trader, is a dream in terms of the volatility that we're getting on a consistent basis. So other than that, can't do the road trip update today. I'm dealing with internet speed technicians and outages and a whole bunch of hassle. So we'll just put in a farm video and we'll get back to the regular adventure series, When the Internet's Fixed. Hope you have a good rest of your day. Do good things out there, and we'll see you tomorrow.